All right, today we're diving into the brilliant, and let's be honest, often volatile world of the global diamond market. It's an industry that's getting hit from all sides right now. You've got economic pressure, you've got cultural shifts, you've got wild new technology. So let's break down what is really going on.
I know, it sounds like the setup to a really weird joke, right? But I promise you, it's not. By the end of this, you are going to see exactly how these three completely random-sounding things are all connected, and how they're reshaping a multi-billion-dollar industry as we speak.
So, first up, let's talk about the economics. There is one single issue that has the entire industry on a knife's edge. It's a classic case of political uncertainty sending massive ripple effects all across the globe.
So, at the heart of all this anxiety is a pretty simple conflict. On one side, you've got the threat of U.S. tariffs, which has pretty much slowed trading down to a crawl. I mean, dealers just won't risk buying a bunch of expensive inventory today if they have no idea what it's going to cost them tomorrow. But then on the other side, there's this little glimmer of hope, a potential exemption. The result? Yeah, it's this incredibly tense global waiting game.
And believe me, this uncertainty is hitting everywhere. In India, the world's cutting and polishing capital, trading is just sluggish. In Israel, a really key partner for the U.S., the market is totally on edge. Business is slow over in Belgium, and even dealers right here in the States are starting to worry about where they're going to get new stones once their tariff-free inventory runs out. But here's the twist. Despite all that tension, big-time analysts like Bain and Deloitte, they're still forecasting positive growth for the holiday season. So what that suggests is that there's a real resilience in the market, and that, for now at least, people still want to buy diamonds.
Okay, but this isn't just about economics. There's another equally powerful force at play here. And this one is changing the actual shape of the diamonds people want to buy. We're talking about a major cultural shift in taste.
So for a long time, the classic round diamond was king, right? Well, you can kind of forget that for a minute. The real action right now, especially for the bigger stones, we're talking 2 carats and up, is in what the industry calls long fancy shapes. Think ovals, marquise, and emerald cuts, and even elongated versions of radiance and cushions.
And this brings us right back to our opening question. What does Taylor Swift have to do with any of this? Well, people inside the industry are literally calling this the Taylor Swift effect. It's simple. When huge celebrities and influencers start showing off these really unique elongated shapes, it creates this powerful wave of consumer demand. All of a sudden, these cuts become the new status symbol.
And this trend translates directly into cold, hard cash. A super sought-after long cushion cut is trading at a staggering 20 to 25% premium over its less popular square-shaped cousin. That is a massive price difference, and it's driven almost entirely by what's in style.
And it's not just cushions. In the U.S. market, those popular elongated ovals are fetching a 5 to 10% price premium over very similar pear-shaped diamonds. It just shows you how specific and how financially powerful these new preferences have become.
All right, so with those two big forces at play, the whole tariff mess and the shifting tastes, let's take a quick trip around the world and see how the major diamond hubs are trying to navigate this whole thing.
In the United States, the market's surprisingly stable, especially for independent jewelers. Demand is super strong for those elongated fancy shapes we just talked about. Now, to manage the risk from the tariffs, a lot of retailers are taking goods on memo, which is basically consignment. They don't have to pay for the diamond until it actually sells. The big worry, though, is what happens when that supply of tariff-free stones is all gone.
Over in India, the mood is much, much more cautious. The tariff uncertainty has made trading sluggish, and dealers just do not want to get stuck holding a ton of expensive inventory. And to add even more pressure, they're facing increasing competition from synthetic diamonds, a threat we're going to talk more about in just a minute.
Belgium is sending some really mixed signals. On the one hand, their polished diamond exports took a huge 21% hit in August compared to last year. But on the other hand, their imports of rough, uncut diamonds were actually up. So what does that mean? It means dealers are slowing down on selling their finished goods, but they're betting on a good outcome with the U.S. tariffs, so they're stocking up on raw materials. It's a huge, calculated risk.
And then there's Hong Kong. The market there is very quiet, mostly because demand from mainland China has really slowed down. Expectations are pretty low for the big Golden Week holiday. Still, it's a hub of activity as they get ready to host a major global trade show. And interestingly enough, those trendy fancy shapes are starting to get popular there too. So all around the globe, you see this picture of caution, strategic bets, and the undeniable influence of new tastes.
Okay, so with all of these forces in play, what's coming next?
Well, the road ahead is really going to be defined by a few key events, some very disruptive technologies, and some, frankly, existential threats to the industry.
The next few months are absolutely critical. First, you've got the huge Hong Kong trade show. Its success is going to be a real barometer of confidence, especially from Chinese buyers. Then comes Golden Week in China, which is a massive real-time test of consumer spending. And of course, it all leads up to the holiday season, which for retailers everywhere is the make-or-break period of the entire year.
But maybe the biggest long-term factor is the industry's great disruptor, synthetic diamonds. And it's so important to understand these are not fakes. They are physically and chemically identical to mined diamonds. The only difference is their origin. One comes from the earth, the other comes from a lab. And that one difference in origin, it comes with a huge difference in cost.
If you want to understand the sheer scale of this disruption, just look at this number. A discount retailer in the Netherlands recently launched a pendant with a real, albeit small, lab-grown diamond for just $35. $35! When you can buy a diamond for the price of lunch, it completely changes the entire conversation around value, luxury, and rarity.
And all of this leaves us with one final fascinating question. The industry is being pulled in two directions at once. On one side, by consumers who now value modern style over timeless tradition, and on the other, by technology that challenges the very idea of rarity itself. In a world where taste is fleeting and perfection can be grown in a lab, you really have to wonder, will the classic diamond truly be forever?